All right, let's talk about a mortgage. What is a mortgage? Okay. A mortgage is a loan. But it's a particular type of loan. It's a loan that goes on real estate, a mortgage, okay? Now there's 4 components to a mortgage, okay? And let's go over that. First is principal. Second one is interest. The third part is taxes. And then the fourth part is insurance. Okay? In the business, we call that PITI. PITI. Principal, interest, taxes, and insurance. I'll write that here. PITI. Okay? So, we just got another vocabulary word. What is principal? Well, let's take a $100,000 loan, and this is just an example. So these aren't real numbers. Okay? Let's take a $100,000 house, or excuse me, $100,000 mortgage, and let's say that the monthly payment is $1,000. Okay? Let's say that $300 is principal, and then actually that's too much. Let's do $200 in principal. Let's do $500 in interest. Let's do $200 in taxes, and then let's do $100 in insurance. So that's $7,000, $9,000, $1,000. Okay. So the $200 would be if you have $100,000. Oops. $100,000 mortgage. You make your payment. $300 is coming off of that. It's coming off of what you owe the bank. Okay. So there's only a small portion of money in the mortgage payment that's actually reducing the amount that you owe on the loan to the bank, or in other words, your mortgage. Okay. When you first take out a mortgage, most of the payment is interest. Okay. And then the longer that the loan goes for, then it kind of does like this: interest, principal. And the longer the loan goes, it goes like this. Then interest, it's the same payment, it's the same amount, but it's how is it applied, okay? And it goes just like this. So whereas interest is the largest part of the payment initially, as you go through the years, then principal starts to grow and interest starts to decline, okay? Until you eventually pay off your mortgage, and then you own your house, what we call free and clear, or in other words, debt-free, outright. You don't owe anything on it. It's 100% paid for. Okay. So so we've got principal of $200, and I put 3 over here. I meant to put 2. $500 in interest, $200 in taxes, $100 in insurance. Okay. Those 4 things constitute a mortgage: principal, interest, taxes, and insurance. PITI. Okay. Perfect.